Hi, I'm Frank from Galileo Capital. Today in our June monthly update, Theo and I will discuss Ramaphosa and Trump at the White House, Theo's visit to Nampo, Budget 3.0. I'll talk about what's driving the gold price, and then how to protect yourself from fraudsters. Let's jump into the chat. Hi Theo, how are you?
I'm very well. It's getting towards winter, and that's the season needs to change. That's part of life. We're entering winter, and if you don't have winter, you won't have spring or summer. So we'll have to work through it.
Yes. So Theo, it's been another very interesting month. One of the big events was Ramaphosa's visit to the White House. Give us your take on that.
Yeah, I think, Frank, yes, certainly. I think we need to split it in two. Number one, the reality TV show. That reality TV show is not the core negotiations and the core terms that we hope the parties will agree on. I think what we also have to realize is that the meeting was slightly late, not because of us, not because of the South African delegation, but because Donald Trump was in the process of getting his budget through and he had to make certain calls. So the sequence of the meeting was changed. The first plan was that they will have a cordial lunch and a discussion and then have the press conference. So the press conference was first. Now that's a reality TV show, and we need to be very careful. That's in the style of President Trump and not necessarily in the style that you usually expect. But my take on it, there's three things that for me, I hope will stand out of that part of the discussion. Number one, I think nobody can get away from the fact South Africa has a major crime problem. However you slice and dice it, it is unacceptable for the level of criminality and aggressive murdering. That is absolutely unacceptable. And I think this was shown up by the fact that every single speaker noted it as a problem. Hopefully there's some kind of wake-up call in there. Secondly, I hope that Mr. President Trump realizes it's a crime problem. That's our problem, and we need to solve the crime problem. Yes, it's unfortunate that there's segments of society that's hit harder than others, which is sad. It shouldn't happen. It always has massive consequences, but it's an overall crime problem that we need to address. And the third one is, I also hope that some of the elements within the governing party realizes that people like Johan Rupert, John Steenhuisen, Ernie Els, Retief Goosen, they're all batting for South Africa. When the chips are down, they're all South Africans batting for South Africa. So that for me is in the reality TV show portion. The rest is obviously the real negotiations, and we are starting to see elements of what is on the table slowly coming through. First of all, we had the real negotiations. I think that's important. In the case of Mr. Zelensky, he was bundled out, lunch was cancelled, he probably bought something at McDonald's on the way home. But at least we had that session, which was constructive if I listen to everybody. And a few things that's starting to come through. We're hearing that South Africa's put a transaction on the table where we will import vast amounts of US gas. We need that in any case. And as a quid pro quo, we want access for something like 40,000 vehicles duty-free into the US, steel and aluminium to be exported. The second point is on the agriculture side. It seems there is discussions on the fact that our season differs from their season. So when we have certain crops, they don't have that crops, that we kind of link the tariffs somewhere around that. That's positive news. And the fact of the matter is, it seems that President Trump is actually considering coming to South Africa for the G20 meeting. Our challenge there is perhaps not the President Trump coming to South Africa, but getting Joburg ready to host a meeting like that. The unintended benefit of that will be people living in Joburg, and perhaps it is like when we were hosting the World Cup, where all of a sudden there's urgency to get things done. So my overall take is it could have been much worse. Could it have been better? Yes, it could have been better. But I do think the real thing now is in terms of the negotiations, and if we can get to an agreement. Remember the 30% tariffs was postponed for 90 days, which runs down somewhere in the second week or so of July. And hopefully by that time, we'll have something proper in place that we can move forward. And we'll just have to hold thumbs. But I think we need to start to focus on the real negotiations and get the reality TV show out of the way.
Yeah, Theo, I thought the South African delegation was excellent. And for me, the key to that reality TV show, as you call it, were two things. One, it wasn't shying away from the problems in South Africa. It was admitting that we have a crime problem in South Africa, but also highlighting that that's not a crime problem that affects any one grouping of people in our country. It affects all people. If anything, the poorest of our country are affected, the worst by the crime in our country. And then the masterstroke for me was asking the US to help. Talking about the value of a partnership, the value of trade, the importance of the US technology. And for me, that just disarmed Trump and he wanted to ambush South Africa. He wanted to make us look bad on international television. And although his rhetoric of white genocide, may still get legs with his followers, certainly internationally, I think people were under no illusion that South Africa has a crime problem and wants help in terms of growing our economy and using technology to improve. So I thought it was an excellent meeting. And as you said, I think the real benefits are still coming. We got to the negotiating table. We had an opportunity to present what we thought would be a good deal for our country, and we wait to see what comes out of that.
Yeah, I think the point is that we must be careful to make predictions. I think various countries and various commentators have learned the lesson that trying to predict the way these things are going to turn out is chances are good you're either going to get it wrong, or if you get it right, it'll be for the wrong reasons, and then you never know what's already discounted. So I'd be very careful to make predictions, but I'm on the same page. I do think that now the test is now what comes out of it. And at least there is proper formal negotiations, and at least it seems to be moving forward.
And Theo, shortly before that meeting, you were at the largest agricultural show at Nampo. What were people saying there? What was the experience like?
Look, I think we need to be, first of all, which was very nice, is the president attended, the deputy president attended, and then quite a number of other cabinet ministers attended. For me, it's always the absolute focus on the future of agriculture, on the future of food security, producing safe food, producing affordable food, and making sure that it's available in South Africa. And I think the key focus, yet again, and that strikes you, is the positive energy in the agriculture sector. And we're talking about technology that's worth, in some cases, millions and millions of rand. We're talking about world-class technology in terms of precision measuring, precision farming, data methodologies around using data. So for me, the key overriding element is always that the South African agriculture sector has got momentum, it's got energy, and it's actually been a great success story the last 20, 30 years. And I think that if I just look at what's on show, the discussions amongst people, certainly the momentum is there. It's a matter of creating markets, creating policy certainty, creating infrastructure to be able to do that. And our farmers will carry on producing food, and they'll produce food for the rest of the world as well if they have the right environment. So positive, yes, obviously questions about expropriation will always be around. Surety of tenure will be around. Things like the infrastructure struggling will be around. Things like tariffs will be around. So those discussions will be there. But overall, farmers are focusing on the future and on producing food, not only for South Africa, not only for SADC, but for the world.
Yeah, thank you, Theo. Thanks for that important insight. And then last week, we also had the budget 3.0 tabled. Do you think it's a good budget this time around?
Yeah, we call it Budget 3.0. Donald Trump at the same time was busy with his budget, and he called it the Big Beautiful Bill. So there's a slight difference in tone. We call it 3.0. His is a Big Beautiful Bill. I think, first of all, there's no VAT increase, which I think we assumed. On the negative side, growth forecasts were forecasted down, were reduced a bit from the previous two budgets. The forecast now is 1.4 for this year, 1.6 for next year, and 1.8 for the year after. That's broadly in line with some of the commentators, although given the tariff noise and the uncertainty, again, it might not happen in the South Africa's case. And that's important because the budget is based on the underlying growth of the economy, and all projections are based on that. That's on the one side. The other side is no major tax increases, but there's no alleviation. The only real tax increases on the fuel levy. And I guess somewhere government needed to get the money. What for me is on the positive side is the principle that we will still budget for a primary surplus. And what that means is if you take interest payments out of the equation, the South African government aims to get more income than they spend. Now that is a nice point to be in, but the key problem is our debt is simply too high and too expensive. Our debt ratio to GDP, well, it'll probably be somewhere around the mid between 75 and 80%, depending how the economy grows. For South Africa, that's high because the cost is so high. Remember, America's debt to GDP is more than 100%, but the cost of debt is much, much lower than South Africa. And that is where our problem lies. The cost of debt is crowding out private capital, and we need to do something about it. The answer lies in growth, and that's why I think we need to focus on things like what government's policies is around growth, what are they trying to achieve around growth. What is nice is the capital amount allocated to infrastructure over the next 3 years. We've been talking about it, and we need to get that going. I think also what we need to appreciate is budget will never be the same again. It will not be the Minister of Finance surprising everybody walking into Parliament delivering a budget. There will be some kind of discussion, but that also has elements of risk in it. A budget you want to be set up by bureaucrats, by technocrats, by people punching the numbers. A budget shouldn't be left to politicians who's actually only after the next election trying to get votes. So there's a fine line there between politicians who might take populist decisions on the budget and the technocratic way that we used to have it, where it's actually a treasury running that whole process. And we need to find a midway there. And perhaps that midway is that there's some policy input, but in the end, you don't want the budget left in the hands of members of parliament, because then you might just get some kind of very populist kind of budget. But Frank, I want to ask you one of the asset classes that is really running and is really had a great 6, 12, 18, 24 months, 3 years or 5 years is gold. And in this whole environment, your view on gold?
No, thanks, Theo. I mean, gold has been on an absolutely incredible run. So if you bought gold in 2023 at $2,000 an ounce, today it's closer to $3,400 an ounce. So your returns have been incredible over the last 2 years. And in order to understand why gold has increased in value so much, you've got to understand what are the key drivers that drive the price of gold. And for us, there are 5 key things that drives the value of gold. The first is that gold is seen as a safe haven asset. It's got safe haven status. And what that means is that during times of economic uncertainty or geopolitical uncertainty, the value of gold increases. Investors tend to buy gold for its safe haven status. And in the last 2 years, we've seen significant uncertainty, both politically but also geopolitically, with wars in Ukraine and Gaza. And then more recently this year, we've seen the Trump tariff uncertainty that's come to the market. So people have moved their assets from riskier assets to what they consider to be a safe haven asset, which is gold. The second driver of gold is its use as a protection against currency devaluation and inflation. So unlike currencies that can devalue, certainly as inflation increases, the value of your rands or dollars becomes worth less. And because gold is a finite asset, there's only so much gold in the earth, there's only so much gold that can be mined. It's a natural protection or a natural hedge against inflation. And so when there are times of significant inflation, again, investors turn to gold as a protection against inflation. The third driver is central banks. So central banks hold gold as a diversification. It's an interesting fact that central banks hold about 1/5 of all the gold that's ever been mined. And there's been a 5-fold increase in buying of gold by central banks since 2022. And they're buying it for the reasons I mentioned above, but they're a massive holder of gold. To a smaller extent, the fourth reason why the gold value increases is where it's used in the jewelry industry, where it's used in technology. And this demand does contribute to the overall price. And then lastly, the gold price is influenced by gold production and supply. So for example, if mining is disrupted or reduced, it can lead to a shortage of supply and again, a potential increase in prices. So you can see in terms of these factors, the ones that have driven gold recently have been central banks buying up a lot of gold, the political uncertainty that we've seen, and investors buying gold as a protection against the more recent inflation. But before you think that gold is a must-hold asset, it's the thing to buy, you've got to remember this. So there have been long periods where if you bought gold, you have had a zero return. So if you had bought gold in 1978 at around $400 an ounce, you would have had to have waited 26 years until 2004 for the value of your gold to start to increase again from that $400 an ounce level. And then it did go on another run. So from 2005 to 2009, gold increased from $400 to around $1,800 an ounce. But then if you bought it in 2009 after that incredible run, it would have taken another 14 years from 2009 until approximately 2023 for the value of your gold to start to increase again. So although gold's been an incredible asset in the last 2 years, it's important to remember that it's very volatile and it's not the only asset out there. And as with any portfolio, it's important to have diversification. And gold can be a portion of your portfolio, but certainly you shouldn't be switching all of your assets into gold right now.
But the one point that you always have to remember about gold is it is not a growth asset. It doesn't pay dividends, it doesn't pay interest, and it doesn't grow. So if I have one gold coin today, it'll still be one gold coin in a year's time, and it'll still be one gold coin in 5 years' time. And that's a difference between a growth asset that has the inherent ability to increase in value simply because the company makes more profits, the company pays dividends, or if you have, let's say you have a herd of cattle. This year it's 100, next year it's 200, in 5 years' time it's 400 cattle. It's got the ability to grow. The point with gold is it doesn't have the ability to grow, so one needs to be careful where you fit it in. And as you quite correctly said, it's been a great asset for a number of years now, but history tells you that at some point in time, sentiment turns, it can turn. So one just need to be careful. It is you hold it simply because you believe that in a year or 5 years' time, somebody would be willing to pay more for that asset that you hold. Not that asset is grown inherently, it doesn't become more. It didn't pay dividends, it didn't pay interest. So one must just be very careful where you consider gold. But as a hedge against risks, certainly it has proven its metal, for lack of a better word. It is proven that it is a hedge against things like inflation, uncertainty, and people like to have a tangible asset when there's uncertainty. But Frank, talking about, we started with crime in South Africa, but there's also, if you look at the way we do business, our normal banking day-to-day business, there is a risk, and unfortunately, those risks are getting bigger, and the fraudsters are getting smarter.
Yes, Theo. We talk to our clients often about what's happening, and many clients are saying that they are seeing more and more, particularly elderly people, falling for fraudsters. And so we thought it's important just to cover the key things that you should do to protect yourself against bank and investment fraud. So the first thing is that you should never share your personal details, your banking login details, your one-time PIN, or anything like that over the phone or by email with someone claiming to be from your bank. If anybody from your bank asks you for any of that information, put down the phone immediately and call your bank directly. This is especially true if the person calling you is putting pressure on you. They're claiming that you're about to lose lots of money, and if you don't give them that information quickly, you're going to suffer big losses. It's your job's bank to protect your money, not yours. The second thing that you should never do is click a link in an email to log on to your bank's online banking. Again, always type in the URL for yourself or save it as a bookmark, but never click a link sent to you in an email claiming to be your bank's website.
Sure.
The third thing you should do is make sure that you've enabled two-factor authentication on your email account. So we do see, unfortunately, where clients' emails are intercepted by fraudsters. They get access to your email account, and then they're able to remove emails that you're supposed to receive and replace them, for example, with an invoice using fraudulent banking details, and then ask you to make payment. So make sure you've got two-factor authentication enabled on your email account. Fourthly, be suspicious of any changes to banking details. So if someone you pay regularly changes their banking details, be very suspicious. I would suggest you phone that person and make sure that their banking details have indeed changed. And particularly with new banking details, always check that you're paying into the bank account of the person you're expecting to pay into. We deal with a lot of investment platforms. And so the fifth thing you should do is when paying an investment platform, so when putting money into an investment, where possible, try and pay to a pre-approved beneficiary. So a beneficiary, for example, Alan Gray is loaded as a pre-approved beneficiary with all of the banks. You don't even need to enter their banking details. You find them as a pre-approved beneficiary with your bank. And then my last suggestion is that when making large payments, consider doing a small test payment first. So if you're paying a deposit on a house and you're paying it into a trust account of an attorney, pay 1,000 Rand or 2,000 Rand first, just a little tester, make sure that that money lands up, confirm that it's landed up in the right account with the attorney, and then pay the big deposit following that. So you need to be aware that fraudsters are out there. They're becoming more and more sophisticated. They have more and more of your information. They're very convincing. They're able to make you think that they're trying to help you or protect you and that they're from a trusted party, but don't give any of this information out to them, because that's how they ultimately will get access to your bank account and steal your funds.
I think that's very valuable, Frank. My view, and I agree with every single point you said, if there's a hint of uncertainty on your side, don't do it. If you just feel this might or might not, just don't do it. The risk of doing it and getting caught is much higher than the cost of not doing it and picking up the phone, or even have a cup of coffee or walk around the house and then just think about it clearly. But if there's any doubt in your mind, don't do it. Stop and don't do it. You can always go back an hour or two later and see what can be done. Because most people, when I talk to them, if they got caught, there was remember now the fraudster has got a scientific infrastructure with certain programs, certain methodologies. They've got a recipe on how to catch you. So they are prepared for everything you say, your hesitancy, your reaction. They've got an answer. They are prepared. They've got a script in front of them. They've got a tried and tested way of catching you out. And if you think you're going to outsmart them, you're going to make a mistake. What you do is, if there's a hint of uncertainty, don't do it. Just stop, just put down the phone, phone your banker, phone your advisor, phone somebody that you trust, but just don't do it. Don't get sucked into a conversation or an email conversation or a WhatsApp conversation or even a person-to-person conversation. They've got a script, they've got a recipe that's tried and tested, and if you're going to try to play ball, they're going to catch you. So rather, at the first hint of uncertainty, put down the phone and cut off the conversation completely, and then phone somebody you trust.
Yeah, excellent advice, Theo. Well, thank you very much. I think it's been a fantastic conversation. We look forward to seeing you next month.
Yeah, great. All the best, Frank.